Hello everyone and welcome back to another week of Market Outlook series with me Kavita as part of EXP-Invest's weekly presentation. Every Friday we come live exactly at 2:30 p.m. to discuss what has happened in the week and what to expect in the week coming by. Today again we'll follow the same structure. We'll start with a look at the chart of Nifty, followed by BankNifty, and move on to the analysis of intersector charts to see where is the rotation coming in, which are the sectors which are topping out, and which are the sectors which are showing signs of early momentum. So with that, let's move on to the chart of Nifty. So during the session, I will request you to please drop the name of stocks which you would like me to analyze for you. The session will be 30 minutes long in total, and my presentation will take around 15 to 20 minutes. So whatever time remains, I will take a look at the comments and help you out with your queries. So this is the chart of Nifty, and as you can see, Nifty has already touched the level of 18,200. Let me take this full screen. Actually, it will be better if I open another layout because this layout is a little overworked. So as always, we'll start with the 3-minute time frame, and here on the 3-minute time frame, let's just go back enough to cover this entire week's price activity. So since this was a truncated week, we don't have Monday's price activity, but you can see that Tuesday, Wednesday, Thursday, we've mostly seen very sideways activity in the market, wherein Nifty has mostly tried to stay above or between the level of 18,000 to 18,200. Today, however, we are experiencing some profit booking. I wouldn't say it is very bearish because we are still above the level of 18,100, which was the first support shared on my Telegram channel with my members. Moving on to one time frame higher, the 15-minute chart. So on the 15-minute chart, what I see, there is a small negative divergence, which is completely fine considering the rally which Nifty has posted all the way from 16,900. But if we look at the chart, and if we look at this price activity on the 15-minute chart, when Nifty forged the new low, the first indication of a potential reversal came when Nifty turned up with very good momentum intensity near the level of 17,000. And if you've been attending my Market Outlook series, on the broader market level, I was not very confident of a reversal coming in so fast. I was expecting the index to continue correction to the level of 16,500. But what I believe is happening here is, see, I believe in the Elliott wave count, and from what I can see, this is basically the wave A, B and C unfolding. So there are two possibilities. One, that this wave which happened, there is a problem with Elliott waves that the wave count becomes clearer in hindsight. So what is happening now is, the first thing is that the first possibility is that the correction which took place from 18,800 to 16,800 was the whole correction, that is wave A, B and C, which would mean that the entire correction was 10%. Now, I personally don't believe that's feasible because we once did a session on the whole Elliott wave count, and over there I showed you that Nifty has a tendency of falling around 17 to 20% from the peak. Right, so this was all the counts. I'm not going to go into details because that becomes a very long session. So considering that 17 to 20% is what Nifty has a tendency to fall from during major corrections, That is one primary reason why I think a major correction is not done yet. And what we're experiencing right now is the top of wave B. So if you don't understand what ABC basically means in Elliott wave context, so A is the first wave. A is basically the first impulse correction wave which has already unfolded. Wave B is a retracement of that correction wave, and I believe that there will be another wave C which will basically be the final impulse correction wave. And the objective, my belief is that the total correction would be around 12% or 15%, because any further would take Nifty to a much lower level. But that is just, that's a far-fetched scenario. As long as you're making very specific stock specific bets, I think you'll be fine in the market. Now, coming back to the discussion of what would have indicated that a potential rally was going to begin here, let's look at some of those indications. Now, if you see the price, when it forged this particular low, there was a very, there you go. There was a very clear RSI positive divergence on the 15 minutes chart. Now the thing is that the 15-minute charts keeps giving positive indications. So what would have told us that, this positive divergence was the divergence? The answer actually lied in this gap up right here, if you can see this. This strong momentum. Now the reason why I'm discussing is that obviously now in hindsight this is useless, but if you listen to this discussion now, the next time whenever the market is in this particular situation again, and you observe these same scenarios unfolding, it'll click in your mind that this might be the beginning of something new. This is exactly how analysts practice in the market as well. So basically, the strong momentum followed by this huge breakaway gap was the biggest indication that the market is ensuing into a strong rally. Not only that, when we finally started to go up, Nifty was not only successful in coming over the level of 60, but it also sustained for considerable amount of time above the level of 70 on the 15 minutes chart. So that's that on the 15-minute chart. Moving on to the 17 minutes chart, 75 minutes chart. Now, first talking about the recent price action, what I see is there is again on the 75-minute chart also a small positive, a small negative divergence, which basically indicates that Nifty is heading downwards. So what would be the first support? Basically 18,000 is the next immediate support for Nifty. I believe that as long as Nifty maintains itself above the level of 18,000, I wouldn't turn my views bearish. 18,000 to 18,300 is the range where I'm expecting Nifty to spend some time. But if Nifty, as and when Nifty gives a breakout of either of these levels, we can expect that market direction to continue for some time. Now, looking at the 75 minutes chart, again, when Nifty forged this entire low at 16,800, the lows formed on 14th March, 20th March and 28th March. Basically, the entire month of March forged a very beautiful RSI positive divergence on the 75-minute chart. Now, the 75-minute chart, unlike the 15-minute chart, has more credibility, and the positive divergences on this time frame hold a lot more weightage. So here we see that in the first rally, Nifty touched the level of 70, came down slightly and went back up again. Whereas in the previous rallies, if you see on the 75-minute charts, Nifty was kind of shy or unable to sustain above the level of 60. Here, Nifty not only sustained above the level of 60 but also went and touched the level of 70. This was a very good indication that this is a strong rally, and this is also the reason why I was able to allocate the cash in my portfolio and my client portfolios 100% in the market during this rally. So as a result of that, this rally has been enjoyed magnificently by me as well as my members. So if I may just show you something. So these are the Telegram channels that I maintain for my exclusive members. And if you see the stock ideas which I've shared, there's been relentless amount of updates with respect to revision of stop losses, with respect to the performance, with respect to, you know, new stock ideas. So for example, if you see, we participated in stocks which have given 6.4% returns in one day, 3% in 7 days, 4% returns, 10% returns, 8% returns. So these are the kind of stock ideas that we've been able to participate in. BPCL we participated and we started this idea on 18th of April, which has gone up 10% in 17 days. Right, the stock idea Berger Paint was being held since a long time. In 3 months it has managed to give 12%. So basically the idea of knowing the broad market activity is that you are able to participate in the market at the right time in the right direction. Now on that note, if you would like to be part of my Telegram channel, then I'm going to share the link with you in the chat. Feel free to click that link and join the channel where you can connect with me. And if you have any stock queries, you can ask those. So I have shared the link in the Telegram channel. All you have to do is click. Now let's continue with our analysis. So the 75-minute chart, like I said, give a very clear indication of the rally. Another thing was that right now what we've seen, 18,000 to 18,300 is very important level. Now coming to the daily chart. On the daily chart, if you remember, when I discussed this few weeks ago, I had said that the daily chart refuses to admit that there is any kind of correction. Why? Basically because the RSI was very stable near the level of 40, which is actually a support level for a bullish trend, for a bull trend. And that is what happened. So on the daily chart, it basically looks like the bull trend is just continued. Now, if you remember, I also told you about level of 60 being an important resistance for when the market is bearish. Now, yesterday, if you see, okay, so yesterday was clearly a very, very bullish day, because the market opened near the level of 18,081 and closed at the level of 18,255. However, this bullishness has clearly not been sustained today, right? Because Nifty has taken resistance at this trend line, as well as today we are seeing a lower close. Tomorrow, or rather next week, we will look out for a breakout beyond the range of 18,000 or 18,300. Now, if this is indeed the wave B of the ABC correction wave that I was just talking about, then what we can expect is that Nifty will not break out towards the above, towards the higher side. Instead, it will come back lower and give a breakout and continue falling. So what should be your take, or what should be your participation, what should be your activity in the market? Right now, don't look out for new ideas, especially in sectors where rally has already come, like banking. If you want to look for ideas where the rally is still unfolding, like healthcare, pharmaceuticals, IT. Not even IT to some extent. IT, I feel, is heading towards a correction again. Now, how that will help is, basically the sectors which have topped out will start correcting, and if the market goes into correction, then this time I believe this time if the market goes into correction, I believe 16,800 will not sustain. All right, so with that view in mind, in your active positions, firstly make sure that your stop losses are tightened. If you would like to use my services for portfolio analysis, you can do that, and I'll be happy to help you over the weekend to make sure what are the levels that you should maintain as stop losses, so that your capital is secure in the next week. Let's now take a look at BankNifty and see whether or not this sentiment has been reflected there as well. So on BankNifty, the rally has been a lot more faster than it has been on the Nifty charts, because you can see that within the same time frame, the amount of rally, which is 13%, is obviously bigger. However, the difference between Bank Nifty and Nifty is that Bank Nifty has breached yesterday's low a lot more conclusively and is heading lower. So again, let's go to the 3 minutes chart and start analysis. So here we can see that Bank Nifty gave a more, so Tuesday was a more sideways activity, but Wednesday, Thursday saw a strong rally with around 1.5% of gain. Today's negative price action has wiped out all of that gain made on Tuesday and Wednesday and Thursday. The 15-minute chart so far is indicating a continuation in this particular correction that has started since today morning. The 75-minute chart is also not looking particularly bullish. So this is the reason why I'm telling you to be very careful in banks. Even as we speak, new low continues to get forged on the chart of Bank Nifty. Now we've come to the weekly time frame. Now that weekly time frame is quite bearish for Bank Nifty as there is a huge negative divergence. Not only that, on the weekly time frame we can see resistance coming in at the level of 60. Now you might be thinking that what is so special about the level of 60, level of 70, level of 30? The thing is that the RSI is a beautiful oscillator, is a very important momentum oscillator, which basically adjusts itself to the personality of every stock, index, commodity or currency that you may want to study. I use slightly modified periods of RSI instead of using the standard 14. After much trial and error, I have identified that there are certain time frames which give very accurate or rather better results than the standard 14 period. So for whatever time frames I'm using across, for whatever period of RSI I'm using across these different time frames, the behavior that it exhibits when RSI reaches a level of 60, 30 or 40 or 70 gives very indicative, is very indicative of what might be unfolding. So here Bank Nifty taking resistance at the level of 60 is something excuse me, that makes me uncomfortable, and that is the reason why I would not be holding active positions in banks any longer. Now let's take a look at the sector charts and see what we have in store. Alright, so from the beginning of this week, we can see that Nifty consumer durables has emerged as a winner, which is amazing because if you remember a few weeks back when we were discussing in the sector analysis, I had indicated towards consumer durables and consumption being the two sectors which are showing some sort of reversal. Today this week is actually the first week when I've seen these two sectors emerge as the winners. Talking of the banking sector, the PSU Bank, the Bank Nifty are both losers of the week because, you know, relatively they've fallen the furthest, and this has only happened actually today, except for PSU Bank, which seemed to have registered a massive fall compared to the week's opening and the other sectors on Wednesday itself. Now the other winners in sectors are basically the auto sector, FMCG sector, infra sector and PSE sector. I would like to give you a warning about the PSE sector. I'm seeing a lot of interest being generated in PSE sectors because they're showing some short-term rally, but most PSE stocks that I've been following are showing early signs of major top outs. See, PSE stocks are big cyclicals, okay? They move in massive cycles wherein they rally in one direction for 2 years and they fall in the, you know, they like fall one directionally for like multiple years. So I believe that most PSE stocks are giving signals that they're close to a potential top and they can go into long corrections. So exercise caution and be sure to use stop losses if you're interested in taking positions in PSE stocks. Talking of healthcare and pharma, we'll also look at these charts, but healthcare and pharma, I believe, are two stocks which can give you big money for even if you want to invest for long term. That's why a lot of opportunities coming in. I recently studied the chart of Sun Pharma, and Sun Pharma can give a reversal now. Or Pharma has already run up quite a bit, and I personally have gained around 30-40%, and it's time to get out of Aura Pharma. But Sun Pharma, on the other hand, I believe is going to get into a fresh rally. Now, speaking of energy, metals, and IT, the energy sector, I believe, has given some rally. So in energy sector, you have to go very stock specific. I mean, that's also true for all sectors pretty much, but energy sector especially, you have to be very stock specific. IT sector has given indications of bottoming out, but now it looks like it wants a pullback just to establish that particular bottom in place. So you might experience some sort of a pullback. It's upon you whether you want to book your small profits, or you would rather hold on to the position, average at lower level, and continue to hold for long term. Now, talking about finance, CNX Finance, I don't really have an opinion on that. Same for service, and I don't really trust the media stocks in this kind of market. So that's that. So I'm going to go back to this chart, and let's see. Let's take a look at consumers, Nifty consumer durables. Alright, so basically this is, so as you can see, this is the Nifty Durable Consumer Index chart, and there is a very, like to my eyes, it's very evident that there's a strong positive divergence. Another big positive factor is that the 200-day EMA has not only been breached, but now is acting as very good support. Okay, this blue line that you see is the 200-day EMA. On the 75-minute chart, 200 period EMA on the 75-minute chart, it's acting as very good support. So if you look at the 15-minute chart, now naturally the entire market is kind of showing a tendency to correct. So this sector is not special. So there can be some correction, but I believe a lot of opportunity is going to present itself here. So keep an eye out for stocks which are part of this particular index. Now let's take a look at CNX consumption. Okay, so on the CNX consumption, it has bounced back from the marked zone here on the chart, and I think the 500 EMA kind of had something to do with it, because every time this index has a tendency to come close to the 500 EMA and then take a bounce. Now the issue in consumption sector is that it's already approached this trend line, which is resistance around 7670, and there is a possibility of correction here. So refrain from making fresh positions without consulting an analyst. Let's take a look at CNX FMCG. So on the CNX FMCG chart also, I remember back in January when I did the session, I'd warned people against making fresh positions in CNX FMCG, but when it came back down and took support at this green line, which is nothing but the 100 EMA on the daily time frame, this is where I indicated that FMCG might be attractive. In our to our members, we gave calls in stocks like Kolpal, which performed really well for us, right? But again, I think FMCG has reached a resistance and might be a little dangerous to continue to hold positions. So I will recommend you not to book profits instantly, but please do maintain your trailing stop losses. Let's take a look at the PSU Bank Index chart. Alright, so the problem with the PSU Bank Index chart is that it basically gave a failed breakout back in December. Alright, and now it is coming back to basically retest that same zone where it failed to break out. And if I take a look at what is happening on the intraday charts, I can see that there is already negative divergences starting to form as an effect of this massive resistance zone, which is 4300 to 4300 to approximately 4400. Okay, so again I will emphasize that banking stocks are topping out, so avoid making fresh positions and trail your existing positions, because if you don't, your capital might be in jeopardy. Let's see. Let's also take a look at CNX Pharma. All right. So, CNX Pharma has given a massive rally already. So this is a weekly time frame, and you can see here 8% rally on the weekly time frame has already come about. But what really strikes me is the consistency of this rally. Very strong rally. If we look at the daily time frame also, now there is a lot of resistance coming in from the 200 EMA and the 500 EMA on the daily time frame, as a result of which there is, you know, some sideways activity. Now again, there is also a negative divergence on the 75-minute chart and the 15-minute chart. So basically in CNX Pharma, wait for some correction to come, and it's also natural, right? Because the stock, the entire sector has rallied significantly in the last few weeks. So wait for some correction before you make fresh positions. Let's also take a look at CNX Realty. Alright, so I find the realty stock a little bit difficult to read. The reason being that it has a tendency of going really fast, and in doing so it also has a tendency of making sentimental spikes, which basically, you know, extends just a little bit beyond the set buying zones. So every sector has their own tendencies, and you know, in the stock market it always pays when we play to our strengths. So basically the realty sector is one of those stocks which actually appeal more to my weaknesses, personal weaknesses, than to strengths. So that is the reason why a lot of times when I try to make positions in the realty sector, I end up making losses more than profits. This also happens with me in the banking sector, but you know, practice makes perfect. So coming back to the analysis of realty sector, again it looks like it's making a kind of a top. Here you can see that it does have a tendency to give beautiful divergences before it you know, does a trend reversal. So here before starting the rally, it gave us beautiful positive divergence. Here now it has given another negative divergence, so you know, that's reason to believe that the correction might continue, and it'll be and we'll see where the correction stops. So there's the first support level at around 413, next is at 388, but depending on how the index behaves, we'll go into sector specific participation, stock specific participation in this sector. Alright, so with that I will now move forward to the comments and help you out with your active positions. So we have Dipen G, he's asking about Manappuram. So Manappuram did fall quite significantly recently, so let's take a look at what might be next. Okay, so it looks like Manappuram has taken a nose dive towards the strong support level of 102 and is starting to reverse. So if you want to make a fresh position in Manappuram, wait, hold on, let me just also take a look at other time frames. So okay, so what scares me is the volumes with which this fall has occurred. Not very promising. Okay, also there is a strong trendline support near the level of 97.5. so if you want to make a short-term, very short-term position, I would suggest you do that, but you maintain this level of basically 101 as your stop loss. What that means is that if the stock goes forward to forge a new low, get out of it, okay, and then try to re-enter around the level of 97, 97.5. But for now, if it does indeed, see, Manappuram did that yesterday also, right? After this massive fall, it basically did give a sort of a bounce, what can be called a dead cat bounce. Okay, so this basically shows that it has a tendency to indulge in such behavior. So I don't see Manappuram going above the level of 111, 112 in this particular bounce back. So if you want to make a very short term position, you can do that. But again, you have to remember that it's the weekend. You might not want to hold such a volatile position over weekend. So the safer bet would be to avoid making any position whatsoever. And if you want to make a position for the long term, then just wait for a little bit more to see what happens. Now let's move on to the chart of Hind Unilever. So this is an FMCG counter, and so Hindustan Unilever is taking support here at the 500-day EMA on the daily chart. Then on the 75-minute charts, here's a RSI positive divergence, but some resistance and indication of some short-term correction is definitely there. It's very hard to tell. It's very hard to read the Hindustan Unilever chart. But fresh long entry would not be recommended, and if you have a current position, I would ask you to please maintain a trailing stop loss at the level of 2490. So we have a query about Asian Paints. So okay, I'm glad someone asked about Asian Paints. So this is one of my favorite stocks ever to swing trade in the market. Gives very good swings. So on the daily and the weekly time frame, we can see that the stock has already reversed and is heading higher strongly. It has backing of volumes, it has momentum behind it, it has positive divergences indicating that the rally is strong. This is exactly where the rally started, and it has already unfolded around 11% in just 36 days. And for a stock like Asian Paints, like a giant mammoth stock like Asian Paints, to give such a rally in such a short period of time is nothing short of a miracle, right? But if you look at the chart, why I say it's a wonderful stock for momentum trading is that it keeps doing this time and again, right? Here it gave a 38% rally in just 66 days. So I believe that Asian Paint is in very strong momentum, and this momentum is going to continue. So it's good to enter, but you have to maintain stop loss, right? So please maintain a stop loss of 2950 for a target of hold on, let me ascertain the target. So I believe that Asian Paint can easily touch the level of 3226, because that is reasons are very complicated to get in, so let's avoid that. But on the daily time frame, we can see that with strong volumes, it has also given a breakout above the level of the 200-day EMA, which is a very strong sign on the chart. Now let's move on to the next comment. We have Praful Dev Ji, welcome to the session. He's asking about Amaraja for swing trading. All right, so this stock for swing trading, let's see what we have. Let's get rid of some of the old drawings. Actually, let's just get rid of everything. So Amar Raja is showing some early signs of reversal, I must say, but it doesn't invoke a lot of confidence in me, at least yet. So if you wanted to make a long position here, so see here, it basically it did start rallying with strong volumes, came back to retest this trend line and is starting to move up again. The problem is that the volume is not yet back, right? So wait for Ramaraja to give a conclusive closing with high volumes above the level of 620. If it does that, then you can go ahead and make a long position. But again, 620 would become your stop loss. And then you can hold the position for around 908, which is not a bad target at all. But right now I wouldn't act on that because this setup lacks confirmations, important confirmations. So I wouldn't act on it. So for Amaraja, I would say it is still a wait and watch category. So we have a guest. He's asking for Pyramid. So he's asking about options. I'm sorry, but I'm not an options expert. So we'll look at Federal Bank for Rahul. So Rahul, I hope you were able to listen to everything I said about banks. And on the chart of Federal Bank itself, I can see that the same sentiment is being reflected right now. Massive decline instantly. It's fallen around 8%. So I hope you had your stop losses in place. Like I was saying, long position is obviously not suggested. If you're still holding on to your long position, my friend, I would suggest rip the band-aid off, get out of it, because this correction is going to last longer. So Rihanna Mishra is asking, are there fresh suggestions for buying short term? So Rihanna, please connect with me on my Telegram. So through my Telegram channels and through my subscription services, I do give short-term buying recommendations in stocks with a risk-reward ratio of minimum 3 for a holding period of 2 weeks to anywhere between 3 to 6 months. So these are all swing trading ideas in the cash segment. There is no leverage trading done. If you're interested in something like that, please connect with me through the Telegram channel. There's a subscription link shared now and again, which you can use to subscribe to services. But see, when it comes to trading in the market, guys, I will really suggest you to use help of an analyst, because making positions in the market is very easy. It's just all about buying, but managing your active positions is very important. And in my interaction with retail traders, this is what I see is the most common problem, is that people might end up buying good stocks at good prices, but if you don't manage that position well, you will not be able to make money. You will constantly see your realized profits turning on your unrealized profits turning into unrealized losses. So what is the point of being in the market if you're not managing it properly? So please associate with a research analyst who will help you make the right decision at the right time in the market. Okay, so moving on, we have HDFC Bank inquiry by Mr. Karthik Prabhu. He's asking whether he should book profit. So HDFC Bank, let's see. Again, see, stop loss is very important. Book profit, absolutely. I have emphasized this time and time again. I have been suggesting my members since the past 2 days to not make any fresh positions in banks and book their existing positions. And today we can see banks have been butchered pretty badly. HDFC Life, should we do first fresh buying by Anshu? So for members whom I am responding with my analysis, please take a second and show some appreciation. Just drop your like on the stream or indicate a comment. It really means a lot to me. Fresh position in HDFC Life is not recommended, unfortunately, because the momentum has fizzled out to some extent, and a correction can, you know, uh, uh, a correction can begin anytime. Moreover, the broad trend in HDFC Life is already bearish. So what we've seen in the last few days was nothing but a uptrend in a bear trend. So you don't want to participate near the high of such kind of trend. So I would ask you to avoid it. So Karthik Prabhu is also holding Bajaj Finance. Let's take a look at Bajaj Finance for you. Okay, so Karthik ji, I would suggest that if you're risk averse, book your profit. If you're not, if you're okay losing some of that profit, I would suggest you maintain a trailing stop loss at 6,266. But for anybody who might be thinking of making a fresh position in Bajaj Finance, please don't. Kanakraj ji, thank you so much for your kindness. I wish more people showed similar sentiments. So we have a reminder from the ET moderator. If you want to book a one-on-one session where you would like to go over specific stock positions where you might be stuck, or you might want to just get a consultation with respect to what should be your participation in the market like, or just get some expertise with respect to your existing portfolio, you can book a one-on-one paid consultation session with me. The link for that has been pasted in the chat by the ET moderator. So if you just scroll a little bit, you'll be able to see that. Book a paid consultation is clearly written in that comment. So we have Amit Ji, he's asking about Tube Investments India. Now, I've never really seen this. Oh, TII. Okay. TI India, basically. Got it. Let's see. So this is a perpetual bull stock which has recently taken 3 supports at the 200-day EMA on the daily time frame. Okay. And now what we see is that the stock is trying to rally, but I wouldn't believe this rally right now because there is no backing from volumes. On the other hand, if you see when the stock fell down strongly, the volume was very strong. Now that the stock has started to go back up, the volume is pretty much absent. I wouldn't believe such a rally. I wouldn't put my money behind such a rally. What I will recommend you to do is wait for another correction, because here, if you can catch what I'm trying to show you, there is a symmetrical triangle forming. So in symmetrical triangles, you have to wait for the direction for the breakout. Now, if this stock gives you a breakout above the level of 2700 and starts picking up volume, then it is a good idea to use that to create your positions and maintain a stop loss again at around 2700. But if it doesn't happen, or if a breakout happens with low volumes, avoid the stock. So Mr. Rishabh wants to know whether he should book profit in RVNL or should he hold. Very strong rally in RVNL. Lots of alerts coming in. Okay, the market is closing in, so I'm gonna have to wrap up this session soon. Alright, so in the chart of RVNL, you should definitely hold. I mean, the momentum is strong, the volume profile is amazing. So just continue to hold your, continue to trail your stop loss. And using the 15-minute chart is a good idea for trailing stop loss. You can use the 100 EMA on the, so basically this is the 100 EMA on the 15-minute time frame. You can use that to trail your stop loss in RVNL. Alright, so we've overextended our session pretty much like every week. With this, I will take an off. I will take your goodbye. And again, to make it easier for you to connect with me, I'm going to paste my Telegram channel's link in the chat. And I hope the members who are attending the live session will do me the kindness of clicking that link and becoming a part of my Telegram channel and connecting with me. The reason why it was beneficial for you is that I am active on the Telegram channel every day, and I help the members who post their queries in the chat group by answering with stop loss, target and advisory, basically for free. So if you're someone who's an active trader, or if you're someone who's an active trader and would like to participate in the market in a responsible way, then connecting with a research analyst like myself can help you benefit from the journey. So with that, thank you so much for joining today's Market Outlook series. I will see you again on Monday with a topic related to retail traders benefit, basically in the retail traders special series. So until then, you have a great weekend. Take care and namaste.